Hello viewers, welcome back. This is our lesson 3 or lecture 3, and you can call it class 3. So today we are continuing with our source document that we had not finalized under our lecture 2, because we had started material costing and we had started looking at source documents. So this is a continuation of where we ended last time. So we had looked at the store requisition form or requisition note. It's a store's requisition form, or what we basically called the material requisition note or material requisition document or form. Now the second document that we are going to look at is going to be the BINCARD. The BINCARD. Now, by the time you try to check your store, because we had said that when the production manager supplies us with the material requisition, it will be now the store's person, after receiving the store's requisition form from the production manager, to go and check the stores to see what is available. So when the store's person has actually checked the stores, and you may find that you'll find maybe you found some goods, and at some point they may not go and check into the store. What the store's person will do, instead of going direct to the physical store to check what is there, they will just check their BINCARD. So you might not go to the store. Instead, you can check your records first. And these records, the record that we are going to be checking is going to be the BINCARD. So a BINCARD critically indicates the quantity of raw materials you have at hand or you have in your store. In other words, the BINCARD indicates specifically the quantities of raw materials that is available at the store. So without you physically moving out and look through the store to see what is there, you can just check your BINCARD. The BINCARD shows only quantity. It doesn't show the monetary value, but it shows the quantity alone, what we have at hand. So in other words, once you have a BINCARD, then it will indicate the quantities of raw materials that you have received. Because for the BINCARD, it will have areas for the raw materials that you have received, plus the quantities that you have issued as well. So you'll be able to see the receipts of raw materials, and at the same time the issues of the same raw materials. So we can be able to see what we've issued. So these are the key things that we need to look at: the issues, the receipts, and at the same time you will also have the balance. The balance of raw materials. In other words, what we have at hand, and that's what we call a bin card. So it is very easy, and it is just all about quantities, not even the monetary figures. Therefore, if you are to define a bin card, you can say a bin card, is a document. We can write a document that indicates quantities of raw materials received, issued, and the balance. So once you have the bin card, then it means you've catered all these three items. So one thing that I want you to remember is that this is strictly quantities. And not monetary values. And the reason as why I'm emphasizing this is because we may have multiple choice questions. And these are some of the things that might appear in those multiple choice questions. So we need to take note of some of these things. Now, if I'm to illustrate, maybe if I'm to just give you an illustration of how the bin card looks like. Illustration of a bin card. I said these they will not ask you, but we just do them for the purposes of understanding. So we shall have receipt side, we shall have issue side, and then you are also going to have the balance side. And these are the main features of the bin card, plus maybe the date and quantity, maybe even the category of the raw material. And that's what always we call a bin card. So we can just have a small illustration to have that in place. We may say date. We have the date. We just put the key things. We have the date, then we can put the receipts. We have the issues, and then we can have the balances. But the balances are supposed to be for only quantity. We are not going to be having anything to do with monetary values. So that's how the table will look like. Here we'll have the date. Here we shall have the value, the stock we've received, the stock we've issued, and then the balances we have at hand. So before we go to the store, we can just check our bin card to see what is available. So therefore, The bin card will indicate what you have received, what you have issued out, and the balances that you have at hand. So, since you are the stores manager and you're accountable for everything that is available in the store, they will come and ask you, what did you issue? Then you will respond that I issued this and this quantity. So you will also have to account to where you issued that stock. Of course, when you're doing accountability, there will be, what did you issue? Those are going to be the questions. Then, issued to who? And then you will also be able to see the store's requisition, because all of this will be accompanied by source document that I issue to the production manager, because the production manager supplied me with the store's requisition. I got a requisition from the production manager. So you will see that these documents are actually going to work as your proof when you're keeping the whatever that you keep in your warehouse. And at the same time, you may find that your bin card may have a column for reference number. You may have a reference number here, because we need to know that the reference number that is in the bin card is the same reference number that is on the store's requisition. To look at the stock that that was taken out of the store, we have to compare the reference numbers. So those reference numbers, they are coming with the material requisition notes, such that when I'm accounting for my stock or for my stores, then I have the source document that can support all that I did in the stores. And all the materials I received as well, I should also be accountable for them, because they will tell you that you received this. So it means even on the receipt side, you are going to see things like the quantity, the date, and the reference numbers to show where you received the quantity from by showing the goods received note within the reference number. Of course, if these goods you receive them from maybe the supplier and they are coming into the store, we have to see the goods received note. When we check on the goods received note, we can actually compare with what reference number that we have in our bin card to be able to understand that this is the right amount that was brought in our store. So I hope you've got my concept. Although no one will ask you to illustrate how the bin card looks like, but I was just showing you to have a good understanding. Therefore, that is one of the documents in the store, or that is kept in the stores department. But we also have another document that looks like a bin card, but for it incorporates the monetary values, and that document is called the store ledger card. So the third category that we may look at will be our store's ledger card. This one looks exactly like the BINCARD, but the only difference here is that it incorporates in, or we have a column for monetary values. In other words, we have to put a column for amounts. So this will later turn into a store ledger account. This is the one that we finally call a store's ledger account. And the reason we incorporate the monetary value is to know exactly how much you are going to cost your products that you are issuing out. Because you will be issuing out raw materials, but we need to put in a value so that because these products were taken by these raw materials were taken by the production manager, and the production manager is going to process or is going to produce goods. So we need to know the value of the goods they have taken so that we can be able to cost the products that we are producing out of the raw materials that we've used. So remember, we said the cost accountant, you are going to, what you are doing, you are costing. So they will ask you how much has this raw material cost you. Then you will check on your issue prices, and even for other reasons. Of course, if we just take goods when we don't even know their monetary value, we can't be able to tell how much we can sell the final products that we've produced. So you also know that the raw materials are part of stock. This is another reason as to why we attach the monetary value. You know that raw materials are part of stock, or what we call inventory. And if you have stock, then you have to be knowing the effect of stock on your financial accounts or financial statements, especially for the cost of sales and other items, because we use stock or inventory to have our cost of sales computed well. And even inventory can also be taken to our balance sheet under current assets. So since we looked at the manufacturing accounts, and we still have the raw material section, where we had a section that had the closing stock for raw materials. So those are the basic reasons for knowing your monetary value of raw materials. Therefore, the effect of knowing the monetary value using the store's ledger card So it is the store's ledger card that is going to help us know the monetary value. However, some organizations may just focus on one card, where they can get one technical person to run a BINCARD, or they can get one technical person to run a store's ledger card. Because the reason as to why they generated a BINCARD is just for accounting purposes. Remember, for it doesn't have any monetary value. It is just for accounting purposes, to help us in doing the accountability. And at times, they can also ask you to reconcile your BINCARD with the store's ledger card. So, on what we discussed for a BINCARD, we just add both the monetary values and the quantities. So they may ask you for the definition of a store's ledger card. So a store's ledger card, we can define it as a store's ledger card is a document that indicates quantities and the monetary values or amounts of the raw materials received, issued, and the balance. So we are going to learn how to do a store's ledger card. After this discussion, we are going to look at how we do a store's ledger card. But there are other documents that we are having in our stores. And of course, if I'm giving out my raw materials, then I'll fill my bin card and the store's ledger card at the same time. Now, that was number one assumption. For you to look at your stores, it means you know that at least their stock was there. Because for you, the production manager may actually give you a store requisition form or a material requisition form, and you actually know that you haven't bought any raw material. You know it's not there. So what are you going to do if you know that you don't have anything in your stores? So there is no need for you to check your bin card or your store's ledger card. So if that's the case, then we shall be going through the purchasing process. Because if stock is not completely available, it's not there for the raw materials, then we have to go through the procurement process. So we go and buy from outside suppliers. Procurement process of buying from outside suppliers. But because the production manager knows that the process of procuring anything takes some time, they may make these requests before they completely utilize what they had at their disposal. Because the procurement department always takes some time from sourcing suppliers to the time they are making their deliveries. So if you find that nothing is in the warehouse, like the raw materials, then the stores department will raise a document to the procurement. I want you to understand, to pick who places that order in formal companies or in bigger companies. It is the stores department. And the reason why they are pressing, they are the ones that are requesting the procurement department. And the reason as why they are raising a purchase requisition is because they have received a material requisition from their production manager. Remember, we said this stores department is within the production department, but the procurement department is not within the production department, because the procurement department has to be different in terms of the organization structure, because they are not only buying things to do with the production, they are also buying other stationery and other office equipment, computers, desks, furniture, and all other things that they buy for running the organization. So that's why you find it is the stores department that will make what we call the purchase order. Sorry, the purchase requisition. It will be the stores department that will raise that purchase requisition. So the stores department will raise a document to the procurement department, since the stores department doesn't actually do the procurement. So the stores manager will work with the procurement department, and they will tell them there is a need to buy raw materials. And how are they going to tell them? By raising a purchase requisition, or what we call a purchase requisition note. So our fourth document here is going to be purchase requisition note, or document, or form, whichever they may call it. So this means that this form is coming from the stores department, or the department that is in need, because sometimes it will not be that it is only the production department that needs materials. They may also, maybe from the finance and administration, they want some office supplies, maybe stationery and all that. So this form is going to be coming from the department that is in need. And this is done by those companies that don't actually have the stores department, because there are those companies that don't actually have a stores department anywhere in their organization structure. So it means whoever finds a need submits in the requisition. But these companies that we are talking about, they are the ones that everything, as long as it is as per requisition, they are supposed to be raised by the stores department, and it will be the other needing department to send their request to the stores, and it will be the stores to align with the procurement department to submit the purchase requisition. So I don't want you to say that in our organization we do this. So we've got what should be done. So if the stores department here, if let's say the stores department wasn't there, this time round it would be the production manager or the production department that will raise the purchase requisition form directly to the procurement department. Probably those companies that don't have stores department, they actually, for them, they don't even use the BINCARD. And there are other system of managing inventory that they may implement, like the just-in-time, the JIT system. Because if you are using the JIT system, there is no need for you to have a stores department, because at the end of the day, JIT system assumes you buy something when you need it. Like you've received the customer's order, you buy stationery, you finish the customer's order, and you buy what is enough, meaning you're not going to store anything. So you don't need a stores department. So the issue here is that you need to understand where the document is coming from. That's what I'm emphasizing. So we need now to know what this means. Theoretically, procurement, a purchase requisition is a formal document. A formal document is a formal document raised by the stores department sent to procurement department requesting for purchase of raw materials. And if they ask you for the features, then you can guess some of them, because I wouldn't expect the date category, the category of the materials, quantities. I wouldn't expect those few features to miss, because you expect to have the date, where it is coming from, what it is, and the quantities. There are so many things that you can, by default, be able to give. But just no one will ask you to illustrate how it looks. So now that the procurement department has received the purchase requisition form, then what would they do? What are they going to do? From here, there are two conditions that may exist. One, if I'm very sure of the supplier, if I'm the procurement officer or procurement manager, and I'm very sure of the supplier, then I will straight away tell the supplier to supply the goods, meaning I'll get the purchase order. So whatever happens on the supplier's side, we don't care. But for us, we have just made our order because we know the supplier. And what happens at his end, we don't care. So for us, we shall just tell the supplier that please supply us with such and such material with a confirmation document. The document that we are going to send is called a purchase order. It is a document that is going to be confirming our order. And that will take us to document number 5. That is our purchase order. So Here you confirm to the supplier about the items needed. If you are not sure of the supplier, then you will need to start the process of procurement or procuring goods, where you are going to ask the different supplier to send in their quotations. And once you get those quotations, you go on and do your evaluation. Basing on how you do your evaluation, whether you are going to evaluate basing on their prices, their quality of raw materials, distance maybe of the supplier, because the supplier may be far away from where they are supposed to deliver the goods. So whichever criteria that you are going to take, what we are interested in is just getting one shortlisted supplier that is going to be supplying us. And we are not interested in the process you are going through, but what we are only interested here are the documents. What are the documents that are going to be involved in those different processes? So we are not going to take you through the procurement process, but here we are only interested in knowing the documents that are involved, and that's it. So when I confirm that I have selected this supplier, then I will go back to my number 5, that is purchase order. Remember, I had asked for them their quotations. It's also document number 6. So when you confirm one person, you go back to the purchase order, and we will expect the supplier to deliver the order that we purchased, and the order will come with the document called the delivery note. It will come with a document called a delivery note, alongside with a document called either an invoice or a receipt. Because it doesn't mean that you are supposed to be receiving invoices all the time, because you can go, if at all you paid by cash, the customer will just raise a receipt. If you didn't pay, then that's when the customer will bring the delivery note plus the invoice, because an invoice is a document that the supplier is going to send for the goods that he or she supplied on credit. So we said in the process of the number 6 was the quotation, and the quotation shows it is the document that we receive from the supplier, the different suppliers from which a qualified supplier is selected. This we basically use it for when we are screening suppliers. In other words, the suppliers, they send their quotations, and then we do what we call the screening or evaluation. Evaluation can be based on prices, it can be based on the quality of the raw materials, the distance. So whichever criteria it may take. And once we get one supplier, then we go back to this purchase order. Then from the purchase order, they bring back to these delivery notes, invoices, or receipt. So a delivery note, as our document number 7, delivery note, we may need to write something. But these are things that you just need to understand. If you understand, you can just explain using your own English. Now, for delivery note, other organizations, when they are dispatching of goods, they generate what we call a dispatch note, and others don't. But for us, we want to confirm that you are delivering maybe we want a confirmation whether you are going to be delivering by air, by road, or by water. Then what we want is our goods. In other words, we just want goods in our premises. So for us, we are only interested in the delivery note. But you may find that these companies, when they are dispatching off the goods, they also put a dispatch note or a dispatch form. This one is only on the side of the supplier. But here for us, we are not interested in the dispatch note because the dispatch note is only helping the other. What we are only interested in is getting the delivery note. That will be the confirmation that we've received the goods. So the delivery note, what is a delivery note? Is a document raised by the supplier confirming that the goods ordered have been supplied. To the right destination. Of course, with the right quantities, etc. So after receiving the goods in our premises, then the company raises a goods received note to the supplier. So that will be the document number 9, the goods received note, because the company has received the goods in our premises. So these goods will be received by the stores department. These goods are going to be received by the stores department. And the goods received note will have the reference number, which means that we will update our BINCARD and the store's ledger card so that to confirm we have received the raw materials, and the process will repeat. And I hope that makes sense. But of course, there are those other documents that may come after that. Maybe, for instance, if they don't use all the materials, because here is where we will end. But the question is, if at all we don't use all the materials, we've ordered the materials, the production manager ordered the materials, but they have not used all of them. So you find that the procurement manager will have to return the remaining raw materials that were not used, since they are not responsible for storage. So they will take back the goods, the remaining raw materials, to the stores department. And they will issue a document that is called the return note. Return note. To prove that they have sent the remaining materials to the stores department. So this, what you just have to know is that These documents, you just need to know where is it originating from and where is it going. So this is the return note or goods return note. So remember, this is not in your accounting documents, but these are for internal control, and they are just facilitating the production process by confirming that you have returned the raw materials, that you are no longer accountable for the same raw material that was remaining. But it may happen that the remaining raw materials are going to be transferred to the next department, because they may use some of the raw materials, and yes, we are seeing there are some raw materials that are going to be left there. So instead of these guys, the production manager, sending them back to the warehouse or to the stores department, they can actually transfer to the other department. So by transferring them to the other department, they will issue a document that we call a transfer form, goods transfer form of or not. Some books you may find when they are calling it form, others are calling them note, others are calling them documents, but they all mean the same thing. Just get the basics or just get the concept behind every document. So therefore, that's how we do the source document. That is the source document related to the acquisition of raw materials. Just like I told you that they may put those source documents in the multiple choice questions, and maybe they may put 1 or 2 marks in section B that will be for those source documents. So we can now move to the details on how we fill in the store's ledger card, because for it has some mathematics. We have to do some computations. Remember, we have to attach monetary values and the quantities for both the issues, receipts, and the balances. Because we also said that the store's ledger card will further lead us to a store's ledger account. And this is specifically when you are doing double entry for raw materials. So let's go into details for store's ledger card. Some documents have not put in the notes, but at least we've explained what they are. Remember, we said the store's ledger card gets us into 3 things. Mainly, the things mainly that we look at here, we are going to be receiving, we are going to be receiving, we are going to be issuing, and at the same time we shall have balances. Because we can't, even if we have produced goods, we can't sell whatever we've produced. Some goods by default they are going to remain. They may be bad, or it may be in terms of stock management or inventory management, by having some stock, maintaining some stock at the warehouse, working capital management, some sort of that. So where we find that this ledger card is going to be in the stores department, because those people, they are the ones that are responsible for raw materials. And because I'm the sales manager, or the stores manager, you will find that you are responsible for the things that have been finished. Of course, as a stores manager, you will be responsible for finished goods. You will be responsible for raw materials, and at the same time you will also be responsible for the work in progress, or what we call the incomplete material. So since you are the stores manager, you find that all these categories are yours. The finished goods, you will have the BINCARD and the stores ledger card for things that are completed. For raw materials, also you are responsible for the ledger cards for raw materials, and also responsible for what is incomplete. That's the work in progress. And above all, stock or inventory. And the good thing is that we know where we account for stock in our financial statements. Like for raw materials, those are going to be affecting, because we need also to know how do we account for stock. Account for stock or inventory. In financial statements. Because by understanding this, it will help us to actually know what we need to do. So we shall know that raw materials are going to be affecting the manufacturing account, that is the cost statement. Manufacturing account. And at the same time, we shall also have the closing raw materials going to our balance sheet. But we also know that the value that is going to come from the manufacturing account here is the same value that we are going to be taking to our financial, or to our income statement, to replace the figure for purchases. Because here we are not going to be purchasing finished goods, we shall be producing our own goods. So the purchase line item will be replaced by the manufacturing cost or the production cost. So meaning the raw material itself doesn't go through the income statement. It goes there indirectly through the manufacturing cost. And at sometimes they may also tell you to draw the extracts. That's why we are focusing on these areas. How do we account for stock? We've seen stock we have in raw materials, finished goods, then work in progress. So we need to know where are these things going to be located. And we shall also know that if they tell us to make extracts of financial statements, we know what to put in which one. So this is the first one. The second one, we have the finished goods. So we know finished goods, they are not going to go into the manufacturing account because they are already manufactured. Maybe if you are remanufacturing them. So these are not going to go in the manufacturing account. Where are they going to be found? In the income statement. And at the same time, the closing stock will also, or closing stock of finished good will be in our balance sheet. So we couldn't show anything to do with the finished goods in our manufacturing account, because that would mean that we are manufacturing it again, yet it is already finished goods. So the third category is our work in progress. Work in progress is something that is not all that complete and it's not all that raw material. So it is in the middle there. It is incomplete. So the work in progress is found in the manufacturing account. And we also have it in the balance sheet, the closing work in progress. So since the closing work in progress is going to be an inventory item, so the reason as why I'm giving you these items, we need to understand where they belong. As long as they tell us you provide extracts of financial statements, we know where to account for those different things. Therefore, as a stores manager, we are looking at how we can fill the stores ledger card in detail. And we said the concept of us making the stores ledger card is having both the quantities and the monetary values, is because we need to do the pricing. The reason as why we want to have the quantity and at the same time we have the monetary values, we need to be doing the pricing or the costing of what we are giving out or what we are manufacturing. And that's our number one reason as why we do stock ledger cards. Then number two, we said that this is already stock or inventory, and we have to know the valuation of our stock because stock is affecting the income statement, the balance sheet, and even the manufacturing accounts. So there is no way we are going to incorporate inventory in our financial statements if at all we don't know the monetary values. Because in financial statements, we said we only account for things that are quantifiable, something that you can add value to. So if something can't be quantified, it means we can't report it in our financial statements. So that's our second reason as to why we do carry out this stock valuation. So here, we need to know the principle that yes, you are valuing your stock. Then the question is, how do you value your stock? Because we've seen the reasons that we need to value stock. But how do you value your stock? How do you value stock or inventory? That is the question that we need to answer. So every organization or every entity will have a policy on how we maintain or how it maintains the value of their stock. In other words, since we wanted the value of stock, then it brings us to the point of knowing the inventory valuation methods. So we need to understand the inventory valuation methods because every company has its own policies. But the policies, they are selecting from those different valuation methods. For them, they may say, we are using FIFO, we are using LIFO, we are using weighted average to value our stock. So we need to understand these different methods before we go in for valuation. So the methods are the ones that drives how you will fill your store's ledger card. And I hope we are getting the concept. So in the process of filling, in in the store's ledger card, then closing balance or closing inventory or closing stock in brackets balances will be valued and this will need to follow the entity's guidelines. These guidelines are going to be on how they value stock, or guidelines or principles on how to fill in the store's ledger card. This is very important. So the store's manager will follow the entity's guidelines in order to achieve compliance. And for the store's manager to follow that, they is supposed to be knowing the company policy or the method they use to value stock. So what we need to do now, we need to look at the inventory valuation methods. Before we attach any value, we need to understand the inventory valuation methods that we have. Now, in costing, we have to learn all the three methods, meaning there are three methods that we are going to use. But for financial accounting and financial reporting, you follow some standards on how we value inventory. Just like we differentiated financial accounting from cost accounting, that here in cost and management accounting, we don't follow standards. But for financial accounting, as long as it is all about inventory valuation, they have to follow IS2, International Accounting Standards, IS2 inventory. And that standard says you should only use FIFO according to IS2 inventory. This is as per financial accounting. It says use FIFO and weighted average. Weighted average method. So FIFO is first in, first out. That is FIFO. And the weighted average method. So those are the ones that are permitted by financial accounting. So if you are doing financial accounting, you are supposed to follow these two when you are valuing inventory. But here, for cost and management accounting, we do all the three. We do all the three methods. Because here we don't follow any standard. So we have the methods, we have FIFO, that is first in, first out, that is FIFO. We have the weighted average method. Then lastly, we have LIFO, that is last in, first out. That is LIFO. So those are the methods that we have. There are three, and we shall look at all of them. But as I said, there are some computations. For us, what we need to pick is the theoretical aspect behind these three methods. Because what we need to have the principles that govern all these methods. And when we understand the principles that govern these methods, then we can be able to do what we want to do. So let's start off with FIFO. That is first in, first out. FIFO method. The concept for FIFO is that the rate or the cost that comes in other words, the concept here is all about the rate or the cost or the price. Because when you're buying from the supplier, it is the price, but to us as the company, it is a cost. So here, the concern is always on the rate. The rate that comes in first, is the first one to be issued out. It is not the quantity. The issue is not about the quantity. The issue is on the price or the cost or the rate at which we've bought that stock. So that's what I want you to pick. I don't want you to pick anything, because there are those arguments that may say that once the stock comes in first, we have to first issue that stock first. No, it's not the principle. The principle is on the rate, because here what we are interested in is the cost. We are not interested about the quantity, but what we are interested in is the cost, the rate. That's why we are doing costing. So the issue here is that for you may come with the argument that the quantity which has come in first is the one we are supposed to issue. That is as per your understanding, but for the principle of FIFO, it is supposed to be on the rate. Because your argument may be right, that if these goods come in first, they are going to get spoiled when they are in the store. The issue is not all about the spoilage of the stock being left in the store, but it is all about on the. So this one, it keeps the price to be current, because you are taking the rate that comes in first to be the one that we are issuing out our stock at. So for example, if you got maybe your first batch of maize at 500, let's say you bought 10 tons of maize at 500 shillings, then the issue should be priced at 5,000. So we don't care how many you had received. If you have one in stock and it is the current one, you got it at 5 shillings, then you're supposed to issue it out at 5 shilling. And of course, the arguments, as I told you, the arguments about the concepts of FIFO. But some of these things we shall get clarity of them when we are doing some computations, because that's where we shall be able to internalize some of these things. So what we shall do, we shall just get one question, then we do all the numbers. We do for LIFO, we shall maybe pick a question, maybe we shall pick one question, then we do all the different aspects. We understand them at once, and then we actually do the computations, because the computations, they're the ones that are going to pick it out very clearly. That's when we shall be able to understand. But just pick the concept that it's all about the rate.